Hello, everyone. I hope there's some people watching us. So I'll check the phone. Today, as a guest speaker, we have Cemal Demirtas with us. And actually, when I first became a teaching assistant, Cemal was still a student at Orta Doğu Teknik Üniversitesi. So I guess I've even been his teaching assistant at one time. So we have some people that have come in. Can everyone hear properly? You can comment on the side. Okay, Abdurrahim says hi, hello. So I'm guessing you can hear us. Let's assume that they are able to hear us. Yes, okay, thank you for the answer. So what I've asked Cemal to do is first, we want to get to know him a little bit. So Cemal, who is Cemal Demirtas? Could you tell us a little bit about yourself and how you got into this business?
First of all, thank you for inviting me. And I really appreciate to have a chance to express my thoughts about the valuation to a wide range of students with different perspectives possibly. And maybe I can start quickly with my quick background. As you mentioned, when you were a teaching assistant at Middle East Technical University, I was studying management. I was there from 1990 to 1993 for 3 years. And at my last year of the university, I went to Chicago, Illinois Institute of Technology, as an exchange student, and I was the one of the first exchange students at that time. So my risk taking, or taking action under uncertainty started with that, because there were a bunch of uncertainties at that time. And at Illinois Institute of Technology in Chicago, I was rather focusing on the financial markets and trading. So it's the first time I had a chance to see the investment banking side. So when I was at Middle East Technical University, I was very much inclined to marketing or the business organization. But when I went to Chicago, I had a chance to see what I like and what fits to my skills and future expectations. You never know what you want. At any age, but still it was a good starting point that I thought I will put my technical and personal skills together in this, area of investment banking and, the equity valuation. And after Illinois Institute of Technology, I went to University of Southern Indiana. I preferred to stay in state for a couple of years as a graduate assistant. And I came back to Turkey in 1996. And my first surprise in Turkey was the military service. I was planning to go for 8 months, at least my expectation. But at that time, they did longer. So I had my military service as a lieutenant for 16 months. So that was one of my also experience, which give me some idea about the risks and possibilities for the future. And between 1998 and 2012, I worked in major Turkish investment banks like Yapı Kredi, TSKB, Garanti Asset Management, TEB, Oyak, and Ünlü. And presently, I work at Ata Invest since 2012. So I've around 25 years of hands-on experience in valuation and equity analyst position. And I have quite, the knowledge about the sector since 1993, when I was in States during my education. So maybe this is a brief history of my past.
How did you how did you first get into this? For example, when you were graduating, did you do your internship at an investment bank, or how did that start?
It was a very interesting one, to be honest, because when I was in Turkey, I was thinking that the marketing side is the area that I would prefer. But when I went there in States, I thought that the valuation side is also, for valuation, you need technical skills and also you need some personal skills. So it's a combination. You make calculations, you will make evaluations, and you make forecast, and then you need to just have supporting arguments, and you need to sell those ideas. So that was the interesting part of it. And one maybe anecdote I can share with you, Adil, is the one of the reason maybe that I thought it was just for me, this the area was just based on the book I read about the history of Wall Street. I still, I maybe if I can find it. This is the book, by the way. Still, it's from 1996, and what I thought because and for the the last 30 years, it has never been a boring thing for me, because the underlying reason is in the past, back in 1886, in the States, the market was just coming up. And even at that time, they were thinking about the foreign investors and from Netherlands and the UK. And the economy in US was just developing. And at that time, the stock markets things and the investment banking gave a chance to the industries to develop. That was really interesting. And at the starting point, many difficulties, many barons, kind of speculations. But in reality, I thought that the industrialization was helped very much by the financial markets. So I believe it's the financial markets, or the business we are in, is like a oil in the engine. So for new ideas, you need money, right? And you need to come up with your arguments. And then if you come up with some, good products for the people, just you are helping with a purpose. So to be honest, that was my starting point. So I recommend all my friends or the student friends to find a reasoning in what they are doing. So I think that's the key thing. I believe it might somehow from time to time you can question, the efficiency of the markets. You can question what's happening in Turkey in the markets. You can always question it. But in the reality, if you look from the positive side, you can say that you see that it's a purpose. So the meat, for even younger generation, it's a purpose. It's just a tool or reason to be in this area that will help the human being. And nowadays globally and even in Turkey, it's a critical thing. And especially about Turkey, I believe that as long as our markets develop, it will help us economy, and at the end of the day, it will help people around. So that's the reason behind my existence. In this area, in this business. So I recommend all my friends to find any reason. That's my reason. Some you have other reason, and you are doing a very impressive job, I believe. I always respect our the professors, because I remember from the past when I went to US, I said, look, they give many things to us, so we were very competitive in the global markets. So what I'm trying to do is to help the like I'm working in the sector, but I also uh, you know want to help this sector develop ethically as much as I can say, or in any good purpose. So that's make me alert and motivated, for the future.
Yes. And I'm not sure I have the book that Jamal is mentioning, but there's a nice set of books: Capital Ideas, Against the Gods, the book on Lords of Finance. And I really enjoy, for example, reading about J.P. Morgan and how
Mhm.
he contributed and what they did. And then every once in a while, read about how they're destroying the markets as well.
Exactly. Because there is always two sides, If we go with the valuation side, there's all the good side and the bad side. The good side is that, but again, there's always a bad side. Like, the cook, many thing happens, in States back in 2008. It has a long history. They start with 1886 and they go to 1929, the big crash globally, and then until maybe 1987 there was no big problems, and they had a problem 1987, and then finally 2008, really that was the time, I think, that the global markets, everybody suffered big time, but we were more resilient, despite all things. We had other problems back in 2001, but at least in 2008, 2009, Turkey, we were rather resilient. So
And it's interesting,
mhm.
from the top schools in the US, the amount of graduates going into finance, I guess, has also uh, cut back a little bit. Finance isn't quite as popular as it once used to be. Do you agree?
Yes, I agree. I don't have the exact statistics, but definitely now digitalization, all those areas, the artificial intelligence, and some other, like the data driven, the sectors are attractive. All, still there's an interest in this area, but of course, maybe at our time it was much more popular, maybe before 2008, because the negative things happened at that time. Many people lost their jobs, so that's the life, and there's ups and downs.
It comes in cycles. I,
Yeah.
I, I totally agree. Okay. So you talked about market efficiency in our classes. Typically, we discuss this. So, has the efficiency of Turkish markets changed over your career? Do you think that it has become more efficient, less efficient, or no change?
I think it's a very good question. Again, I will, by the way, I will just attribute to the valuation all these, the questions relate to the valuation side. So it will be maybe also helpful in terms of efficiency. Back, in before 2001, 2000, we were in making all the calculation in US dollar because we had very high inflation. And by the economy, the reforms back in 2002, 2000, after the elections, we were rather close to the international standards, to be honest. There was, because international money flow was into Turkey. Even, you remember, not some days TL was at 1 to 1 levels. So at that times, and from 2004,
It never was
2008.
quite 1 to 1. That at that time it was 1 to 1 million.
Yeah. And those actions are taken one to, yeah. Just it made, at least, it was simpler at that time. So things were simple, and the inflation was coming down. So that was also important. And with all those things, we had the good times. Maybe until 2012, 2013, with some ups and downs in 2008. But the key, and I remember for the equity analyst positions, Adil, between 2001 and 2000, between 98 to 2001, there was a, not high demand for the analyst at that time, but between 2002 and 2005, there was a, big demand. So for the younger generation who just get into this business, had a, higher rate increases because of that demand, because the international money was flowing into Turkey, and that was the good times. So over time, And by, I guess, 2012-13, we came to investment grade. By the way, as like Turkish football, when we had the championship for the the third ranked in the World Cup, I thought we are gonna go. I was younger and I thought we are gonna go to the sky in all times. Always up. And in football and also in economy, we said that there are big downs. So after 2012-13, when Turkey was at investment grade, by the way, and investment grade, and the rates were at 6% levels. And in these discounted cash flow valuations, you take the discount rate, like it's in Turkish lira, by the way, 6%. Now it's like the 40% or 20%. We are taking a long-term average, by the way, but at that time, that was the level. So that was the top level, and then many things happened, internal and externals, and we just muddled through for a very long time, I can say. So I remember back in 2013, discount of Turkish markets against the global peers, emerging markets, were around 3%, 4%. Even the Koç holding company was trading at a premium. So at that time, that was things were much positive. Currently, we have 53%, discount to global peers. So by our economy had a upside, grew. We didn't see big slowdowns. And because of the currency flexibility for a while. So I can say that for some time we had a down cycle. We are still at that cycle, but we possibly after the general elections, I think we went, get back to the orthodox policies, which is supportive for now for the economy. We have some, of course, suffering in the domestic demand. It's not going to be easy, right? Because of the interest rate, the increases. But at least we are in the rational policies are coming out. Our current account balances despite is improving. During the last several months, I see that that's encouraging. Over the last 2-3 months, because the energy prices are helping Turkey now. So at least we are at least lucky. For the following year, this is a big question mark. But as I go back to your question, I would say that in terms of the level of the public interest is impressive. When I first came to Turkey, all job offers I were taking is the treasury business side, which is depending on the high interest rates. Right now, still the interest rate might be high, but the stock market is much more, the reaching much more people. I think that's the good part. But the bad parts, still there are big efficiencies, and it's really difficult. And many IPOs are happening, as you are possibly you are following. And again, the valuation is the important when we go to, we are talking about the valuation, right? And there are wide variations, and I am trying to sometimes it's not my full responsibility to inform the public, but sometimes I feel like it's my responsibility. Even in Twitter, I try to give some my thoughts. I'm not I'm not trying to pick any specific company, but I'm trying to just show some direction on that. I don't know the future. I will, when I get into valuation, I don't know the future, but there are some metrics that we look, and based on those metrics, I can make analysis. So I am happy with the IPOs, wide range of. It's a new alternative way of financing. That's very good. I love it, but I even my relatives are asking me stocks. I am recommending them to be picky and get some advice, and then do your the valuation. So I believe we are expert in the area, right? But every decision maker, if you are an investor, you need to have the at least the reasoning behind those. So you might not be an expert in the steel business, but you should read about the different the backgrounds and ideas, and then you can develop your own valuation. So efficiency side, I don't think we are at this stage. Even the US market is not very efficient. It's closer to the efficiency because of the technology. We are getting closer, but there are always a question about that. And that's we have a big responsibility, I believe, because one company, small company with much the difficult or like big fundamentals is priced at a higher level, a big cap. That's a big anomaly. So these things can go for a while. One of my colleague told me, oh, Cemal, when not everything is valuation. When you ask about the price, not everything is valuation. There are some other factors. So when you look at the definition of valuation, it's my part of my job, right? Or anybody, it says at the end of the day, the judgments or the buyers and sellers will depend on fundamentals. For instance, you have this phone, right? There's a market price. But if it was a closed market, you and I make the price of this, because you are buyer, I am seller, and then you are seller, I am buyer. If the liquidity is lower, it might take very long time to get to the fundamentals. So we can price this phone. I will say, Adil, I'm selling it to you $1 million. And then you are selling it back to me $2 million. We all agree, right? No problem. And another friend comes, also he joins. And we come to 10 people, and that's a big market, more liquidity. So the price of this phone is $5 million. And that another person from outside is jumping, and he's not informed. And say, oh, the price of this phone is increasing, so I should buy it now because next year it's gonna be $10 million because there's speculation, and then the guy is buying, and here's the
Sounds like a
mobile.
classic bubble building up.
Exactly. In some cases, and in some in efficient stocks, I can say, as I said, if there's more efficiency, then it will depend on the fundamentals. Otherwise, that's always especially about the IPOs. Recently, you see many IPOs, and the question is, there's no, at the beginning, there's no efficiency. So you are setting a price, you are depending on, by the way, when you have an IPO, the market, the stock has not the rating or the price.
Mhm.
But when you put it, you also assume that you are gonna just compare with the fundamentals at some day. But when you look at the first price, the real pricing comes after very long time, because you need to see the future and you need to see future prospects, and then it
And
takes
you're
time.
kind of hoping that the investment bank did a good job in its pricing before the
Exactly.
IPO.
Definitely, it's a very difficult job, I believe, but everybody has I think, the responsibility, and the regulator, and even we are all responsible for the long term, the future. And I think, we need to put more efforts. And I think the financial education and understanding valuation is like to help, because I know many people who are not in this area have very good skills of making analysis. That's me, keeps me optimistic. And I believe when you are doing evaluation, you should be asking why. And I recommend all our student friends and the others who are watching us, I recommend to ask the why question at all times. So that's the big, that's the first starting point of the real valuation. So you need to just ask the question, why I should buy. Let's say I'm an expert in the steel market. I spent my maybe 25, 30 years in this area. Okay. And I have analysis, and I ask anybody in the street. Okay. I say, I made this analysis, and I say the steel price will come down significantly. That's my call or idea. And the other guy who doesn't have any knowledge about the sector could say, oh, Jamal, I don't agree with you. I look at this number, and then I think it's going to be, the other way. It's going to be just against what I said. So he might be right, by the way. There is a chance. Okay, because the key thing is in valuation and anything, we are making decision under uncertainty. So when you ask me about the valuation or my as a equity analyst or other analyst areas, I think we are making decision making under uncertainty. So as we mentioned, at the beginning, I can give my perspective as an equity analyst that might be helpful for my friends. I think it will be helpful, and I can say that the valuation is everywhere in your life. You are evaluating everywhere, even your friends. To be honest, you don't put numbers, but you have always some rating. So that's part of your life. As a profession, as an equity analyst, you might be analyst. Analyst means find the reasoning. But as an equity analyst, you always you are especially in the area that buy company. You might, for instance, have a debt analyst. You are not being an owner. You are, if you're at that markets, that analyst, you are looking for the
fixed
bonds,
income.
fixed income side, yes, and you are looking for whether this company will pay debt or not, or at what risk. That's the side. But you also need to know the same process as the equity analyst, but your purpose is different. If you're an equity analyst, so you are being an owner. So you need to consider that you will have that for the going concern. So you need to look for the future. And there are some private, the equity sites, which is very also popular in the area, or in entrepreneurship, the areas which you have focus. They're buying and selling, the valuation side at the early stage. And at some point you have benchmarks, and at some point you don't. So this is the kind of the science and the art together. It's never like science, you can put.
At ODTÜ, I would teach valuation, and Nuray Güner Hoca would teach fixed income, for example. So in the same semester, we'd have both courses, and I would joke to the students. I would say, hey, if you want a simpler course, go take the fixed income course. Why? Well, there the cash flows are known. Okay, so at least you have fixed cash flows. You just need to determine, the discount rate. But in my class, even the cash flows are uncertain. So you don't just calculate the discount rate. You also need to estimate the cash flows. Obviously, I'm joking. That there's a lot of other details and things that go into fixed income valuation as well. But it's fun. It's fun. Okay. Before I get into the example, the DCF or investment valuation example, I want to ask you a little bit about your views on technical analysis or technical analysts, chartists. What do you think about them?
Actually, this is as a part of the business, to be honest. And there are there are many friends who are doing that very good. But as a fundamental analyst, in the long-term perspective, I don't look at the technicals. I never draw a chart. I have a look, but I never. And the long-term investors, they don't do that. And there's always a discussion about the market, like are you an investor or trader? So they all base their valuation on the the fundamentals to some extent and news flow as a technical analyst. But in technical side, sometimes you might rather focus on the supply and demand and very short term. So I would say that they're all combined together. And in very efficient markets, I think technical, if the market is very efficient, in some cases we are seeing that in Turkey, in many few cases, and in some cases we don't. But if the market is more efficient, then technical analysis might work better. But if there are efficiencies, and because my argument is related to if there is any new information, it's get into markets as soon as possible. So that's sometimes you might not hear the news. You are not the first one to hear. So it might take some time to get the market. So the market adapts itself to the news, and sometimes technical analysis gives some hint. For instance, one of my colleagues was just saying, Cemal, something is happening in this company. I can feel or I can see from the movements, and I look, I should call and understand what's happening. Is there any news flow or anything potential? Or I'm making some, the assumption or the argument that this might be related to this issue. So you can use combined, but of course, sometimes in Turkey, whoever draws a chart thinks he or she is a technical analyst. It's very dangerous. You can see that, okay, but I recommend, especially the investors, individual investors, to get some advice or to base their advice, the decisions on some, the educated, the valuation side, all those things. Otherwise, the risk is much higher than what they thought. So, you cannot ignore it, but always ask why question. And again, I might be right or wrong, but ask me at what condition. If I'm saying, the umbrella, sales will increase because the rain will increase the next year, and because you need to look at if the rain is lower, then umbrella sales will come down. So I should be consistent. So I would rather, again, in the valuation side, in company with everything, we need to look at the consistency. So I think that's a key thing.
Yes. And in general, don't go to a finance professor and ask about technical analysis, because for true finance academicians, the technical analysis is like saying your mother's ugly, right? Because we're not supposed to believe in that. If the markets are even somewhat efficient, technical analysis is the first thing that shouldn't work. But there's so many people using it that we still have to be aware of what's going on. Okay, so moving on. Today's subject is valuation, and valuation from an equity analyst's perspective. So, Cemal Hocam, can you give us some insight into what it is that these equity analysts do, and you as head of research at Ata Yatırım? Okay, so what do you guys do? Can you give us some examples, some samples of what's going on?
Exactly. I should give some like hints about this area, and who are
Ahmet actually wants a real summary, but it doesn't have to be 3 words. Okay.
Okay. As the basic thing, in this area, I think the technical skills, which mean are not like the technical analysis. It's sometimes it looks more technical to fundamental, but fundamental is more technical than technical in real terms. So
we're going to confuse them.
Yeah, that's the thing. But for what we are doing is, as I mentioned first, we mentioned about the valuation side. You are finding a value for something, for a company, like even buying a house. You buy a house in one street, the area, and you depend your the valuations on some metrics, let's say in one area in Nişantaşı, 30 times your annual rent is the price you can put there. In another district, suburban district, you will say 20 times the annual rent will mean it's the price of the, that's how the valuation goes. So I will jump into the other area, but that's the like the PE, price earning, is just exact the same thing. That's the you are depending on variable valuation on some the metrics. So but the difficult part is what's going to happen to my house in one area in the next 5 years. So we are making decision making under uncertainty and in the future. So even if you are a buying house, if you are you make all those analysis, you go and you say, look, this area is developing, metro is coming here, the Olympics are gonna happen in this area. So you are foreseeing that the future price in this area will increase. So it all helps your valuation. So maybe the rent in that area will jump from, let's say, 1 to 2 in the future. So you are making all decisions for the future. And in our area, the equity analyst or any analyst, what we are doing, what we are doing is in the stock markets. Firstly, every analyst, I'm the head of research, and I have colleagues in different sectors, but I also work as an analyst. That's because I love it, and I believe in the leadership being just doing by the same things. You're not going to do the same things, but leading by examples. I think that's our approach, because the analyst is you need to you use your skills and your, as I will mention about those analytical skills and the personal skills together. So when we hire people, we are focusing both in Turkish and English. They need to express themselves, because we are also targeting international investors and domestic investors. If we are going to focus on the domestic investors, then the English might not be critical. But for any sector, global sectors, English is like a mandatory, because you need to understand the structure of the industries, all those things. So you need to have the speaking and writing skills as your native language or closer. And I believe everybody has a chance to develop it if they are committed. So that's one thing. The other thing is technical sides, which means analytical, which you have in schools. So what you are teaching, I think, Hocam, you are teaching those things very good. But what I see missing is, I recommend our schools to use the students to use more Excel kind of things, because they are doing all their studies on writing. So when they come to the new positions, they are having difficulty to adapt. It takes some time. So I believe they are not difficult things, like Microsoft Office. They are learning in the on the job in most cases. But if they learn it more in the school times, then it will be helpful, and it will help them to impress the companies more. Because for the youngers, I expect higher skills in those areas compared to I am, because I used to do similar things. I am very fast and everything, but I need to learn from them. So these the skills are helpful for them. And reasoning, again, which we got in Otto very good, is that you need to find reasoning. So if you are coming for some arguments, you need to find the reasoning. So you need to be hardworking, and you need to understand the past. Let's say a company, I will show one report of the company like Shock Market, which I promote very strongly nowadays. When I start with this company analysis, what I am doing is, first, as I said, valuation is one part of it, our job. It's like the half of it. But you need to have a strong, the balance. What we are doing is, first, we are, as analysts, we are assuming we are guiding the younger friends, the colleagues, of course, because we are experienced, right? So first, what we are understanding is, as an analyst or anyone who's wants to know what analysts do, or who wants to be a stock picker. I don't want to just put the definition, but it's as we are professional, that's the case we need to see. So you need to see the understand the industry first, I believe. And again, and I see that difficulty youngers, they want to go forward, but they don't want to analyze the past. So I can say that without knowing the history, you cannot go forward. That's what I learned. Because over the last 5-10 years, you need to see how this, the company developed. What are the key strengths of the company? What mistake they did in the past? What are the key strengths? So you need to make a industry check first, and you need to make the human resource side, I think, is the key thing. You need to, calculations, DCF, you can just, teach it, the technical side. But you need to know that it's art and science combined. You need to understand the industry. And for this, first, you need to just, search the historical secondary data, which means, read all the publications, follow all the company's announcements, and there are like which are the critical announcements they made. So go to the past, and then catch those histories in my life, right? I know all those, but for the youngers, they need to study it harder to understand the past. So I think that's the key thing. And if you understand the past, it will be helpful to make the forecast. And again, I can just tell you this. Everybody has an idea about any company. And again, I am assuming that as an analyst, we believe that at some point, valuation will come, or just be justified by the fundamentals. But again, if it's not an efficient market, and if somebody call you and look, this company is going, and I don't care, I look at what price are giving or selling, but I made profit. So I think that's the important thing. So if you in the other area, like just like gambling, it's another thing. But in this area, you need to study the past, and then you need to look at after your secondary data, you need to study today how it's the perception. You need to meet the management. I think this is also a question. And I also recommend my colleagues to understand the company dynamics. Ask anybody, your friend in the area, how is your business? Find the suppliers, like the Porter model, I think, which I use all the time. What are the suppliers think? You need to do channel checks in your environment. That's also important. All these data is coming together. And your hypothesis, like, let's say I am coming with the argument like shock markets should be a good idea, right? And I made all the studies, and then I put into my numbers, valuation, and I put the income statement, balance sheet, and cash flow statement estimates for the following 3-5 years. After 5 years, it's just a guesstimate, but for the following 2 years, your assumptions and your expectations are the key, because you will base your estimates on those numbers. So I think that's what differentiate us from anybody who makes a guesstimate about the stocks. You can find like you can say that Amazon is gonna be good, for the future, because it doesn't make profit now, but in the future it's gonna make profit. It's gonna be a huge thing. You ideologically, you are correct. But I know that in US, there are analysts working for that and understand the fundamentals. So in our job, what we are doing is we are estimating the future cash flows and the realities. We are following the regulations. What's going to happen? Is a regulated sector or not? So what I learned is really understanding the industry is the key thing. And it takes many years, and you need to spend some time. And I recommend my friends who wants to be in this area to ask people as much as they can. So you might think you are a technical person or just hardworking, but that doesn't help by itself. Just you need to have a good network and you need to search for idea. So after all those ideas, you test your hypothesis. Sometimes you come with the idea that you like this company, right? It's the starting point. But after your calculations, you see that, oh, look, this business not good, or the future prospects are not good, some of the difficulties, then you can have the just the opposite opinion. But our job is the the idea generation, we call it. If I come with like shock market, it's my idea which I want to support to convince the international local investors to buy this stock, and this is the or sell another stock. So that's help. And it's not like buying and selling it, but as I mentioned at the beginning, like a house, buying a house. You are invest I am assuming that that you are making an investment into a growing idea, growing area, like buying a house. And in this area, we are saying is this company will grow with profitability. And the key thing in our job is to believe that the company will share, because that's as a ethics important, reliability important, trustworthy. So like it's a human being, that's the art part. So after all these things, again, consistency is important. If you make those calculations, right, the numbers change all the time, hocam. Yeah, you can always play with the numbers, and the numbers doesn't need to just max exactly, because you have inflation, other currency, all those assumptions. By the way, we are all making assumptions in macro estimates for the inflation. Let's say for this year we expect it to stand at 67%, and next year 42%. And then in the dollar TL, we say 30 dollar TL this year and 40 next year. So when we'll make again 3-year forecast, 2-year, we base on some assumptions. Let's say euro dollar is 1.09 or 10. We put it this way, and it's the critical thing for the exporters, by the way. If the euro dollar is going up to 115, it's good for Turkey. But if it's coming down, it's not good, because our costs are in US dollar, but our revenue is euro. So these are all the examples of the analysis. And again, we need to be specific. Sometimes economists have difficulty in that area, and sometimes the who have management background are having difficulty in seeing the big picture. So it's you need to have a combination of it. Sometimes some engineers, by the way, in all majors, we see analysts in any sector, like many engineers or many historians. By the way, history major will help, because you can learn the numbers, but if you have skills in the history or reading, it also helps. So there is no limitation. But if you are learning more, at least you have some internship in this area. That's a good point. If you know what's like CFA is, it's a good point. If you know Porter model, it's good. I always ask that in interviews, because it helps with the the
Competitiveness.
industry. And with all these, I can say, with all studies you made, you prepared a report, the company report.
Mhm.
Let's say I made all these studies, and then writing side is coming. Yeah, you are putting your valuation. In valuation, discounted cash flow is very much taught at schools, more and given more credit, as it like more like the analytical. But in most cases, in real life, the comparison peer multiple, if you are seeing the right multiples, it's more common. And then we are coming with the reports, and after reports, I say, look, I have an outperform rating for shock, and I see let's say 105 uh, Turkish lira target, and it has 69% upside, and it's better than the deposit rate on average. So I push it. which means I come with this, and it's a selling part, by the way. The selling part means, you are selling your idea. It's a, and you're
Convincing the customer.
exactly, that's and then the buyer is buying, and then you're always giving some hints. They are making, the portfolio manager makes the decision for his, because he knows his risk, right? You may put like equity or not, or for the international, the currency risk are there, but our basic, the customers are like the especially international, institutional, local institutional, I think, which because of this pension system, I think, which is the one of the best reforms, it was help, and the individuals, but we rather do mass communication with the individuals, and sometimes I'm trying to help individuals which have good sense in the area, or which are eager to learn more than welcome. I'm trying to give some time to them, because you don't know what's going to happen. Maybe next year they're going to grow much bigger. So and if they are into this area about the fundamentals, then we are trying to give as much as possible, or any thing. So
Mhm.
going forwards, I think that's the key thing.
Let me make a few comments. For example, you mentioned like Amazon, right? So it's growing, it's increasing its sales, but even though it's performing very well, it could be a sell because you want to look at what has happened to the price, right? Right now, I'm looking at it, it's more than $1.5 trillion.
Hmm.
So even though it has huge sales and it's increasing, its price could have risen too far. So that's where you need the, I guess, the analysis. That's where it comes in. What do
Exactly.
you expect to happen in the future? And has the price already adjusted? Efficient market? Or is it yet to adjust to this information? And when are other market participants going to agree with your analysis? So you pointed out that relative valuation is probably used more in markets, but relative valuation has its roots in fundamentals, in discounted cash flow. You need to understand DCF well to be able to use relative valuation well, because many people use relative valuation in a wrong manner.
Yes.
They calculate some ratios, PE ratios, but the companies that they use to calculate it are not comparable to your company. And that means that, they're growing much more rapidly or much more slowly than your company. Then just because you took an average of 10 companies doesn't mean that that number should be used. So help us with the fundamental analysis. So you mentioned shock. Could you
Hmm.
give us some insight into what kind of analysis you're doing there, or do you
Yeah.
just go straight ahead with the relative valuation, or do you do the DCF first?
I think it's the combination, but again, I think you have a good, had a very good summary. By the way, what's happening is, as you mentioned, in like the Amazon case, even they are not making profit at the bottom line. So if you use PE, it might not be helpful, right? So I think in reality, you can look to, you think that the company is a ongoing concern, right? That's the key thing. And if you think you don't know the future, it's a cyclical sector,
So
then you
the
can
ongoing concern or going concern Jamal
going
is mentioning is that
yes,
you value the company assuming it's going to continue to exist. So you're
exactly.
not looking at just the value of its assets, you're looking at what it's going to be doing into the future indefinitely. Go ahead, Jamal.
Exactly. And if you look at the future, you need to see the future, maybe for the foreseeable future, 10 years, 5 years. You don't have the chance to see that, but at least you need to make an assumption. You see it if you are following a steel company, you should think that the demand will continue on that side. You cannot speculate on that. But if there's a growth area like Amazon, they are putting some numbers possibly, which they believe that that's gonna be reached, then some will be convinced. Some of them will be, again, we are all making decision under uncertainty. So the arguments they have for the future, like not next year or the following year, but for the foreseeable, like the number you have in discounted cash flow, I think it needs to be for the estimated. And again, in this case, the key thing is, for a company, any company, you need to look at the discounted cash flow, right? You need to see the future. But the problem with the discounted cash flow is you are making big assumptions about the terminal value, which is very, very difficult. In Amazon case, you can put 5% growth, the value change, and the 10%, it will change dramatically. But again, I totally agree with this side. You need to have an idea about the discounted cash flow areas, because for instance, if there's an investment in the company, or it's in the for a couple of years, for the following 2 years, you see a big earnings, you are taking the PE, right, as a comparator, but you're comparing with another company, and your company needs to make a huge investment in the third year, right? You are comparing the following 2 years, but there's a major change or capex in the third year. Then if you go with the relative valuation, it will not help. So they need to be use combined. But the preference for the multiple relative value is just trying to not depend on the very in specific some sectors, not to depend on the future, on the very long term perspective, because you can pencil in big growth in that area. So if you have a conviction, then you can use it. But if you have limited foreseeability, then you need to use the the relative. So in on a valuation, in any M&A, all these the valuation models are used: discounted cash flow, relative value, sum of the parts in holdings. Holding is discount is implied, and also you have like market value comparison. Sometimes they don't take it, as because sometimes the fair market value is not fair at that time. So real transaction, the majority change, if there's a majority issue like that differentiates the equity valuation from the M&A, is the control premium. In the markets, you are a minority, so you don't have control premium. So in some cases, if it's an M&A, the value of the company could be higher if you have a higher just benefit from the acquisition. So in shock case, I would give an example, because
Yes.
the
Ahmed
key
was
thing.
asking, can you give one without name and info? You're going to do better. You're going to give us an example with the name.
Yes, because it's like public, as our report is public, I can say. And firstly, I need to understand the food retail side. And I argue that in the report, I made all the studies, there are 3 players in the market: BIM, Migros, and Shock Market. And another Carrefoursa is in the market, but the valuation, all those are not reasonable. So we are not putting that comparable with the others, because it looks very overvalued for us. And because of the liquidity, we put it aside. But the 3 of them are the key players, and there's a penetration in the sector. Industry developments, we see that there's a the consolidation in sector. It's the trend in all developed market, by the way. From time to time, they are just pointed as the reason for high inflation, but I believe that they are just helping the inflation to come down, because already they are more efficient. So our argument is the transition in the food retail will continue. So industry, we are comfortable. It's a net working capital needs are negative. So they are selling now, but paying the suppliers at a later day. So even in macro uncertainties, it's helpful. So these are the same things for each player. So we look at the comparison. One of them is growing 85%, the other is like 75, and the other one is like 80%. So we make those comparisons, and for the following year, we make estimates for the following year how they're gonna grow. We believe that Shock is the runner-up against the Beam. Beam is by far the largest. Migros is a different model. They are also growing, but Shock has a room for utilizing their stores more effectively and efficiently. So we see more room for the positive developments in that area. And we believe that it's the discounted more compared to peers. Like we are looking to EV EBITDA multiple. I think in Turkish market, if they are gonna follow, they need to understand EV EBITDA and PE multiples. These are the key multiples to understand. And when I have interviews, I asked the calculation of that, and I think that's important. It's not like on the market cap plus net debt plus minority interest minus financial assets. That's the they need to understand the dynamics, the balance sheet dynamics. So I argue that it's trading as a discounts, and the company's profitability is not maybe changing, but cash flow is improving. And another factor which was putting discount on the company, as I mentioned at the beginning, you need to understand the industry and the ownership, especially about Yıldız Holding, which is also the owner of Ülker. They had difficult times over the last 5 years. They had $5.1 billion net debt, and it went down to $1.3 billion. So they made the acquisition of United Biscuits in UK. They paid 3.1 billion sterling for that, and just after their acquisition, the Brexit happened. Imagine, you are buying a company and you are paying in sterling, and your debt is in US dollars. So we made all those actions, and because of that, they didn't, the group suffered, and there was concern about the group in the past, and there were, they need to, because the confidence building is getting difficult. What we believe is the ownership is more comfortable now, and there's a room for further growth, easier growth, because if you are struggling with some other problems, you cannot have develop good things on the other side. So what we argue is better, the situation for the group, and the sector is growing, and they have a good knowledge of the all Turkish market, and they are like investor friendly. So when put all those things together and the macro volatile risk, we just come with we overall continue to like the retailers, but in particular, as you mentioned in Amazon case, Beam is always solid, okay, but it's trading at higher multiple. So what we argue is it's also upside, but this company has more upside because we argue that we see things better than the others, possibly, or our assumptions are solid. So I have a saying on that, every good idea has a risk of failing, and every good idea, in parentheses I put, in your mind. So there's always a risk, but you need to put your arguments, and your success in the past helps you to make better guess, by the way, as in our job, if you are just trustable, if you have I think that's the best thing for anybody. If you are trusted and if you have a good track record, then it's easier to make all. But personally, over my last 25 years, I always, it's like I didn't ever getting just like the pregnant, you bring and you have a kid, right? We don't have the chance to leave that, but every idea I have is like that. You have the pain. A good idea comes with some pain, so you need to put some efforts, you need to work on that, and then it comes with some the outcome. And always we can say that you are as good as your last call, they say, in our market. But of course, your track record gives, or that helps you for the future. So these, when you look at these, you need to have in this area, you need to be hardworking. Like I say, sometimes we are like a truck driver, Adil. You need to say, like, I feel like with mouse, like shift, I will like my the screen. I feel like I can say like 16 hours. It's not healthy, I know, but in some cases in this area, from time to time, you need to just spend some time. And on the other hand, you need to be social. You have to have balance of that. I'm just giving you, because if you are introverted only, you will have difficulty to selling your arguments. You are very extroverted but not technical. So if you start bullshitting, I can say, then it's not help. Also, it's not helping. So you need to have combination of it. It's difficult, but you are always trying to get our best. So maybe these are the skills you need in all the areas, I guess, right? In all areas. But maybe these are the samples I can give at this point.
But I want more concrete data. For
Yes,
example, you mentioned shock. You
yes.
mentioned doing a valuation, a DCF valuation. For example, how long do you estimate for the intermediate growth? For example, how many years are you estimating the G before everything becomes constant growth?
What we are
Or do you
doing
do that?
is, yes, 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 yes. By the way, when we are do modeling, and when we share our models with international clients, and
Hmm.
for the first year, let's say for 2023, we are in it. We have quarterly estimates. First, you need to have quarterly estimates. If you are annual estimates, it's like for us, it's very amateur. To be honest, that's the case. And then 24 to 2030, we are going until that. But you don't need to go for more than 5 years or 6 years, because nothing will change if you have big knowledge of, like, the different periods. So I would say that following 2 years is important, and but the other 3 years or 4 years you can put. But we go until 2030, 2028, and we also
Okay.
make our macro estimates until 2028. Just the end of the estimates, going, just we are assuming that Turkish lira depreciation will be the lower than the inflation slightly. So
Okay.
these are some the assumptions we are taking.
Okay, but that's for the economy. So for shock, for example,
Yes,
up to let's say 5 years, 2028,
yes,
then you need an estimate of the growth. I'm
yes.
guessing the estimate of growth of their net income. I'm guessing you're doing an equity valuation,
Hmm.
so it needs to be for net income. Where do you get that number?
Yes, what we are doing is, first, for the top line growth, we take several things, like for like sales growth, which we based. You know, there are two components of the depending on the data they are sharing. By the way, in some companies
Mhm.
you cannot find, but for them they give the like for like sales, and any sales growth, let's say 70%. They give the the like for like sales growth and the new store contribution.
Okay.
And new store contribution is just based on the kilometer, the square meter addition, store
Mhm.
numbers.
Mhm.
You can put that way, like
Yes.
8%, 7%. For the like for like, you are having two assumptions again. One is the like for like basket size, which we derive from the food inflation, which is important. And the other one is
Mhm.
the traffic, which we based on the indications we received from the company. So for each quarter, first we need to understand the store openings are important, because they have been growing fast, but now they are just the moderating that, because they want to be more efficient, assuming that around 600 stores for the following 5 years. Again, as long as we don't see any change. But if they
Mhm.
in 1 year they open 100, 1,000 stores, and then we are questioning whether it's going to continue or it will come down. So we go with some run rates for some sectors. If they are growing, then we can be assuming that they are maintaining, unless we see some other factors. So top line growth is in that way, and the profitability is we are taking the gross margin side, and we have the employee costs. They, as much whatever the company gives, about the gross margin, we are taking the some rough estimates, and the OPEX side, employee rents per store numbers, and the we need to take the minimum wage into account especially in this area and other sectors. So we go with the operational profit, then considering their balance sheet, that side, we come to the bottom line. So we have bottom up approach, which means we are going from scratch. So net income is the end results. In DuPont, they are making some, right, the DuPont model. You put the net, the net income to assets, net income to sales, sales to assets, assets to equity, kind of, these are the parts, I think, in, the many cases they are
To
using,
clarify
but that's the
it for
approach.
the students, Jamal, let me kind of
Yeah.
clarify it for the students, right? So Jamal Hoja is saying, basically, first they estimate out for the next 5 years what they expect to happen in sales, right?
Exactly.
And the sales growth is going to come from, are your existing stores going to sell more? Okay, so same store sales. And they're going to open new stores. And how are the sales in the new stores going to behave? Okay, so then you get an overall growth rate for the sales. And then from sales, you need to go down. So how much profit are these sales going to generate? So you go up from the top, and then you come on down, and you get an estimate, I guess, for the next 5 years, making assumptions about different costs, how they're going to change, how the margins are remaining, and so on. And so you don't necessarily have one growth rate that you apply. For example, sometimes we see average of the investment analysts for a particular company being used for 3 to 5 years. You don't necessarily do that in Turkey, I understand.
You do it if you are a buy side. By the way, I should give the definition of sell side analyst and the buy side. Buy side means in portfolio management companies, it's like the purchase, the purchasing department, let's say. They are also doing their analysis by themselves, right? They are making their calculations, but they can also, use the suppliers. So, for instance, we are, giving some service to the fund management companies, and they also have analysts there, buy side, and we are sell side, which means we are in the brokerage house. We are coming with our ideas. We cannot just say we are taking the average of the other houses for us, but they can internally use it because they are not publishing, or if they are publishing, they can use the consensus. Or if we are using, we cannot, if we are covering the company, we cannot use the consensus. But if we are making a quick and dirty, the models, or just to inform the clients, then we can say, look, this is the market expectations, because we don't have any addition. Because for us, contrarian opinion creates some value. So consensus, and the mostly less, the experienced analysts also have tendency to go to the consensus. They look the others, but that's not very helpful. So contrarian opinion always makes sense, but of course, if you have the arguments behind that, otherwise. So the average of those are used mostly in the buy side research, and in many cases, I know that in the international and domestic, they are making their own models. And again, the model is a very serious thing for any serious valuation. I think that's the key thing that differentiates us.
So we have an estimate of the growth rate for the intermediate period. What discount rate are you going to use? How do you find that?
About the discount rate, there is always a question mark, and there are many studies on that. About the discount rates, for instance, at the beginning I mentioned we had 6% discount, the interest rates back in 2012, and look, if it continues like that, we become a developed market. We have 6%, and if you go with this valuation, in the past we were doing mark to markets. So whatever you see in the rates in the the screen on the screen is the one you base it. You put it considerable, sustainable. But what we after those incidents, because if you go with those valuations, all of a sudden Turkey went to the junk again, and then those rates were up. The rating, the interest rates went up significantly. So what we and all of a sudden your valuations look doesn't make sense. It's not helpful anymore. So what we are doing now is taking the previous 4 years, and we are making some estimates for the following 2 years, and we are taking average of that. Let's say
But the average of what? Its return?
average of the 10-year bonds, 10-year Turkish lira bonds, or
Okay.
if we are making a US dollar, the valuation, and then we are taking the again, the US denominated bonds. Let's say
Okay.
in Turkey, we take for risk-free rates, we are taking 19%, which is the average, and we are not assuming that these 40% levels are sustainable for the future.
Okay.
So we are taking the
So
average.
19% for Turkish lira denominated long-term
Yes,
government bonds.
yes.
Uh-huh.
And for the US dollar, if we are, for instance, for Erdemir, we are doing, if they are as their functional currency is US dollar, we are making it in dollar rates, and the Turkey is, in dollar is around 6%, 6.5% levels, Euro bonds levels we have been
The
taking.
the 10-year I think is close to 8%.
I think we are taking, last time we have been taking 6.5%. Maybe now it might be at that level.
Okay. But that's the risk-free rate.
Yes.
Or are you using that to discount? Or how much
Yeah.
equity risk premium are
Equity
you
risk
adding on
premium,
top of that?
we have there's always a question mark about that, but we always put 5%. It's like a common understanding. You put 1.5% over that, so that's equity
So
risk
kind of
premium
like
you are putting.
Damodaran, I think, uses that as the mature market risk premium.
Exactly,
So
that's the market risk premium, which people always put it that way. There are some other calculations. That's the one of the key thing nowadays. Maybe in some cases you can take a percentage of the for instance, if you in US, you are taking again like 4.5% plus equity risk premium. So in dollars it doesn't change a lot, but when you put Turkish lira, maybe in some cases it might be considered as like the overvaluation, because you are putting only 5%. Let's say if it's 30%, then the 5% is nothing, market risk. So these are always under discussion, and again we rather go with 24%, 25%, the discount rate, weighted average cost of capital, depending on the market. So we are rather trying to get some number, because when you get into the assumptions, it's making much more complicated. So but basically our assumption is on that, and it doesn't take you anywhere, by the way, because real rates are not easy to, for Turkey especially. That's why we are emerging market. That's why we are very much fragile. Those calculations makes it more difficult. And even now we have inflation accounting. By the way, that's gonna be a tricky thing, because next year we are gonna see, the IFRS 29, but
yes,
our estimates are
revaluation fund
nominal.
is coming back.
Yes, that really, I don't know how they are going to approach it, but it's going to be a case study. So how we are going to see, because your numbers needs to be comparable, right, all the time. So for now, 2024, you need to have comparable numbers, and I would just recommend the companies to announce the statements in both IFRS 29 inflation accounting adjusted and without it, because my reasoning is, Adil, if they want to be more transparent, because that way at least for 1 year they will give us a chance to see where our estimates are standing.
Mhm.
Right? Because we currently base our estimates on nominal. So in 1 year, all of a sudden, I will not have any
But,
comparable number.
but we're switching from a low inflation to a high inflation environment all of a sudden, which is also messing things up.
Yes, maybe
Yes,
at the beginning, maybe
yes,
last year it should have been taken, but at that time, I think the companies didn't want for the
they weren't ready.
rather than the government. So this area again, it's an area. It's getting things more complicated. We need to simplify.
Just this week's homework was about the risk-free rate and the risk premium. And just this morning, we were discussing, okay, this is what you guys put in, and this is what I think should be used. And so this is particularly kind of what we're doing. And I don't know, I guess I was a little hard on some of the answers because I said, oh no, if you leave it in the risk-free rate, all Turkish companies are equally exposed to that country risk premium and so on. But apparently, the investment banks are doing that. How about for the
Exactly.
long term? So after 5 years, 2028, okay. After 2028, when they go into constant growth, what do you use?
For the discount rate, you are asking, or the growth rate?
For the growth rate.
Okay.
Growth rate.
Rate. I think again that's the tricky point about the growth. I see in some models that in the past we are making the discounted cash flow on US dollar in the past because of high inflation, and when you don't see any growth in US dollar, you put 1% or 0%. But now in Turkish lira we make the estimates. So I look at the valuations, and I look at what's the inflation estimate for 2030. If it's 7%, okay, we are not in the calculating in US dollar, in TL, 7%. Then if you put 9%, okay. But if you go in the memory, if you go with the US dollar side, and if you put 1%, and then I question it, because you are not taking the inflation into account. It means you are putting some discount, the contraction. So the answer to your question is, we are assuming that the growth after at the terminal will be in line with the inflation or a little bit higher if you don't expect any growth. But if you, in some cases, the 3-stage, 4-stage, normally we do 2-stage, I can say. And at some point, for long-term perspectives, let's say some company have, like Coca-Cola, will have acquisitions, but we don't know the timing. So in that side, you can touch on that, putting higher growth rate than you initially thought. Right? That's what that makes the discounted cash flow more manipulative. But in some cases, if you think that there will be because they make acquisitions at all the time, inorganic growth is happening, so you need to put it to some valuation.
But if you put it too high, because that lasts forever,
exactly,
it ends up taking over the entire economy. So
exactly,
typically, we advocate, okay, when it reaches constant growth, the overall growth rate of the economy is probably what you want to plug in to that final number. Inflation or economic growth. Or do you use some relative valuation for that terminal value?
for the terminal value, we are not the relative value. We for the following 2-3 years, because after 3-4 years, again, inflation is taken in the account, and the comparison is much more difficult. So if you don't expect any company specific change organically or inorganically, then you are assuming for the following 2 years.
Okay. Well, I'm having fun, but this has gone on quite a bit. We have a few questions.
Yes, I
Let
would more
me
than help.
share those with you.
Yes.
One of them is, am I going to give valuation class next semester? No, I'm giving it this semester. Next semester, we'll have some other finance and entrepreneurship classes. Ahmet is asking about the IPO trends. Okay, what do you expect to happen? And
Uh-huh.
so, do you have anything to say about this one?
Yeah. I can about the IPA. I'm hearing that even but we always do channel checks, right? Even for the younger people around us, I see that with the IPO trends, especially students are also putting their pocket money into those stocks. Because there are big demands for like 5 million, like demand, and everybody thinks that it's gonna go up double, right? Because of the high demand. So it has been a trend. So they are putting their money and they are doubling it. They're fine. It's like
One
Nasrettin
time it
Hoca
doubles, and then boom,
at some point.
like
But
Bitcoin.
as long as and I think the risk is this, Adil. If you put the same amount of money, no problem. At some point, it's gonna be a signal, nothing. And I think it may go for a couple of months or quarters. But the problem is, if you are a pocket money, you have 600 Turkish lira, you can make it 1.1, 1.2, 200. That's good. But if you start going to IPO, let's say, mother, father, let's sell the house. Your grandfather, mother, convince them and buy this because it's gonna double, and that might be a big mistake at some point. So the energy is mounting, and what I would recommend is, and I'm trying to do my best as a professional and as a I would say as a like a public service part, I recommend them to question what they are buying. If they are buying something that they don't have any valuation or sense, makes sense, because recently they are announcing some reports about the price determination reports. They can read those, understand the business, because at IPO they put the reasoning of their pricing, so that's a good thing. But the issue is there are many questions ahead. So I would say that the IPO trend might continue, and the regulators should be more careful about that. Because there's a demand. At some point, it could balance, but again, they should invest. If they're gonna put higher amount of money, then you should better evaluate that, because not all the IPOs will go well for the future. It's not sustainable.
My general rule that I suggest is put in the amount of money that you won't cry if you lose it. If it's going to
Ex-
make you cry, you probably shouldn't be playing with that. And
exactly.
also related to IPOs, the general rule around the world is this. So for an IPO, the price calculation again is done by an investment bank. The
Yes.
investment bank actually has two things it needs to be careful about. One, it wants to set the price appropriately so that it can get enough money for its customer, which has hired it to do the valuation. But at the same time, two, the investment bank has its name, its reputation. If it overprices the security and then the price falls, that harms the reputation of that investment bank. So typically, investment banks will do the calculation, then they should undervalue it a little bit to leave some room for price to rise when the IPO happens, because that will allow them to do business again and again and again in the future. Is that valid for Turkey as well?
This is idealistic, which I also want to believe, by the way, idealistic, view, I can say. It really depends on the power of the pricing in the market demand. If there is a high demand, then, but I would, for the sustainable, like the image of the company or the investment bank, uh, I recommend to be balanced. I can say that you can come up with the fair and value, and you keep your premises. The promises. I think that's gonna be the thing. And about the future, your promises are important. You need to keep them. And then about the valuation, if somebody are buying, that's fine. But if you put, and they also, by the way, in all IPOs, they made a valuation and then they put investments, the IPO discount around 20%, 15 to 30%. That's the common approach. But the key thing is how predictable these companies are going forward, and do the investment bank care about it? For their reputations, they need to care. And as long as because in all IPOs we see the price jumps, but the important thing is what's going to happen for the following 3-4 years. For me, successful IPO should have volatility in the beginning, but going forward it should be gaining the trust of the investors. I think, which you mentioned, ideologically, idealistically, I can say the target, but it's not very difficult. Believe me, sometimes, as I mentioned at the beginning, the valuation assumes that valuation will approach to the fundamentals. But as I gave the phone example, if you believe that you can manipulate everything, then there's a greed coming out of the markets. So in your statement, I would say greed and fear are all together. If greed increases, you want more, more, more. At some point, it hurts you, and that's the case for the sector. So everybody should be careful. And I think the capital market board has also responsibility. Borsa Istanbul, from time to time, they are mentioning about that, but everybody has a really, for it's like a social cooperation. I think everybody has a responsibility, but it's a hard sector. If you make a negative comment about a very bubble company, you might receive many reactions, which doesn't justify, right? As the analyst for the last 25 years experience, as the professional, do I need to do that? From time to time, my friends ask me, Jamal, why are you just getting into those? It's none of your business. Just be easy. But from time to time, I'm trying to, just mention uh, which we need, I guess, for sustainability of all of us, because it's a greed and the fear. I would end up with that. These are the two things we need to balance in all our lives, and the valuation on the stock market. It's all related, and I all recommend my friends here to be involved in stock markets to some extent, who are very the even the most cautious ones, because it's their live thing. Even in when you get older, anything, just understand to some extent. It's like, instead of Bitcoin, I think it's more understandable, in my, at least from my perspective.
Okay. Thank you, Jamal. That was an interesting talk. And I will find you and catch you and get some more concrete numbers in the future as well. But I enjoyed that. I hope the class and those that haven't been able to attend will be able to watch the video. So thank you for that. And I think that's going to be it for tonight. So thank you, Jamal. Thank you, students that have been watching. There was a question. I actually asked my question for ODTÜ. Right now, I tried to give a class at ODTÜ this semester, and it was not approved. Not the department, but it had to do with higher up in the hierarchy. So probably not this semester, but perhaps in the future, I might be able to offer courses again at Ankara as well. We'll see what time shows. Okay. Thank you, friends. Thank you, Jamal.
Thank you.
It was nice.
Thank
I
you. It
hope
was
to
very
see
nice
you
to
around.
informative.
And we want you to come visit Kayseri. And
Yes, yes. I am looking forward to see you there and visit Kayseri. And at least I want to feel, how things are also there. I think it's always good with the trades. That city has a very, good stories. I know from the past, so we any place in that area will be very interesting, and I'm looking forward to be there. And thanks again for having me. And I think I had a chance to express all my thoughts about in like elevator talk of my 25 years experience. Maybe it take longer than maybe what we initially thought, but I hope it helped. Any like 1 hour of listening to or watching us might mean 2 years for maybe one student. So even that motivates me to be here with you, and always I get always good energy from you. And you are a very good example. Thank you for being yourself all the time.
thank you, Cemal. Okay. Okay, rest of the class, I will see you guys around. Goodbye.